Welcome to The Explainer. So, right now, there's this really high stakes countdown happening that's got investors all over the world, well, pretty nervous. And it's all boiling down to just a couple of key dates this August. Let's dive in and figure out what's going on. So, here's the big question, right? Why is pretty much the entire global financial market holding its breath this month? Well, it's all because of this intense game of economic chicken and, some major geopolitical moves. Okay, to really get what's causing all this tension, you've got to picture it like a global chessboard. We're not just talking about dollars and cents here. No, this is a massive strategic power play. And believe me, every single move has some serious consequences. So, what's at the heart of this whole thing? Well, it's a U.S. strategy that's basically using its economic muscle, we're talking trade, and especially the threat of tariffs, to get what it wants on the world stage. Now, the main target here is Russia. The goal is to push Moscow towards peace talks. But, and this is the key part, the fallout is hitting huge U.S. partners like China and India directly. Now, let's look at the two giants caught right in the middle of this, China and India. And they're in totally different spots. You've got China, which is doing this delicate dance, trying to renegotiate its own trade truce with the U.S. And they have a massive bargaining chip, right? Their control over rare earth elements. Then you have India. India's in a much tougher, weaker position. Sure, they're a huge supplier of software and generic drugs, but they just don't have the same kind of leverage that China does. And that makes them way more vulnerable to U.S. pressure, especially over their oil imports from Russia. So, all this geopolitical pressure, it's building up to a very real ticking clock. The anxiety you're seeing in the markets isn't just some vague worry, oh no. It is tied to specific and, fast approaching deadlines that could totally shake things up. Okay, so what's the actual tool being used here? It's something called secondary tariffs, and you really need to understand this part. See, this isn't a tax on Russia itself. It's a tax on anyone, any company, any country that keeps doing business with Russia. It's a pretty powerful economic weapon, really. The whole idea is to financially isolate a country by making it way too expensive for anyone else to deal with. And that brings us to the actual timeline that has everybody so on edge. You've got today, August 6th, where the markets are just tense, waiting, watching for some kind of surprise move. Then boom, August 8th. That's the deadline for India to comply with what the U.S. is demanding. And right after that, on August 12th, that fragile trade truce between the U.S. and China, it's set to expire. Each one of these dates is a potential flashpoint. All right, so how is all this uncertainty actually playing out in the financial markets? As you'd expect, investors are reacting to this geopolitical pressure cooker in some really specific ways. Let's take a look. First up, let's look at gold. It's hovering around $33.70 an ounce right now. And that price, it tells a really interesting story. On one side, all this geopolitical tension is pushing people towards gold, the classic safe haven asset. But on the other side, the price is just kind of stuck. It can't seem to break out, which tells you investors are still holding out hope for some kind of peaceful, diplomatic solution. The market is basically completely torn. At the same time, you've got the US dollar, which is getting stronger. The index is climbing up towards 98.7. It's a classic move, right? When things get shaky around the world, money floods into the dollar for safety. So this rise we're seeing, it's a direct reflection of that geopolitical chess game we were just talking about. And that search for safety, you can see it clear as day in the bond market too. The 10-year Treasury yield is sitting just over 4.2%, which is a really attractive rate for investors who just want to park their money somewhere safe. But, and here's the catch, there's a big test just around the corner, a $42 billion bond auction. That's going to be a huge test of just how confident investors really are. Okay, so with all this anxiety swirling around the markets, the really big question becomes, is the actual underlying global economy strong enough to take this kind of pressure? Or are all these political games starting to cause some serious cracks in the foundation? Let's look at the actual numbers. A really key indicator for economic health is the services PMI, and the rule of thumb is simple. Anything over 50 means you're growing. Now, as you can see, all the major economies here are technically expanding, But look at the United States at 55.7. It's not just growing, it is seriously outperforming everybody else. Yeah, and this chart right here just makes that point so clearly. The US service sector is basically acting as the main engine for global growth right now. It's showing a kind of resilience that's in really sharp contrast to the, let's say, more modest growth we're seeing over in Europe. And just to double down on that point, the Atlanta Fed literally just bumped up its growth forecast for the US for the third quarter. And why? They're pointing to people spending more money and businesses investing more. So even with all these global headwinds, the US economy looks like it's on some pretty solid ground. So where does all this leave us? Well, on one hand, the global economy, especially led by the US, seems pretty darn resilient. But on the other hand, the political situation is still incredibly fragile. So let's boil this all down to the final word. As we look ahead, there are really two huge wildcards that are just looming over everything. First, the risk of a political miscalculation. I mean, one wrong step, one misread in these sensitive talks with India or China, and it could completely shatter the market's fragile confidence. And the second thing? The independence of the U.S. Federal Reserve. There's a new appointment to the Fed board coming up, and that could potentially give the White House more influence over monetary policy, which, just adds a whole other layer of unpredictability to the mix. And all of this really brings us to the final big question we're left with. Are we watching a masterclass in diplomacy here? A clever use of economic power to get political results? Or is this just a reckless, high-stakes gamble that could throw the entire global economy into chaos? I guess we'll find out, and probably pretty soon.